Namaste, I'm Diksha Yadav, your host for What This Means, a Swarajya podcast show where we discuss news behind the news. Joining me today once again is Professor Prasanna Tantri, and with him we'll be discussing key takeaways from the latest RBI monetary policy meeting. Namaste, Prasanna ji. Welcome back to the podcast.
Namaste, Diksha ji. We are meeting for the fourth time, I believe, third or fourth time.
Yes, and your wishes from like one after the other are kind of coming true from say the before the budget when we did, and you're desperately wishing that the total expenditure should not cross say more than 50 lakh crores. So that also kind of came true. And then next was the RBI rate cuts on which we did, and you were hoping that they move their policy stance from neutral to accommodative and they go for multiple rate cuts. So that also have come true. It's like the universe is trying to nudge you that don't be pessimistic.
Yeah. No, no, no.
So
So on the budget front, but at the same time, you remember we also discussed that
yeah,
they should have cut tax targets. They
yeah,
cut
yeah.
taxes was good, but they have not cut tax targets. If
Hmm.
they start achieving the same level of tax collection with reduced rates, I said it's going to be worse. Let's sincerely
Yeah.
hope that they don't achieve their tax targets. That is what,
Uh,
in fact, this time the success will be in its failure of the budget in one
mm,
sense, right? So,
yeah.
I
And we are
let's
already seeing the kind of rules. I mean, we can do another podcast on that. But when it came to accessing your social media for tax, this thing,
yeah,
uh,
yeah.
so we already can see some kind of steps being taken to meet the target.
Yeah,
So
that's the worry.
yeah. So let's come to this RBI monetary policy. So this is second consecutive repo rate cut, another 25 basis point. Now it's 6%, and then changing its policy stance from neutral to accommodative. So first, if you can tell our listeners what this means and why this was necessary.
Yeah. So now as you rightly said, RBI has cut rates. In
Hmm.
my view, this would have happened anyway because
Okay.
as we discussed several times before, these RBI was sort of worrying about food prices leading to expectation, leading to
Yeah.
higher inflation and so on, which was not to be. And food prices once rains improve, they will come down. This
Hmm.
was again expected. There's nothing new about it. And the good part is RBI seems to have recognized that. But the more heartening part for me, before I explain what this means, is the language of the monetary policy statement. Last time, you remember, we sort of highlighted that they are talking about trade-offs
Yeah.
between growth. They are recognizing that too much tightening hurts growth. But
Hmm.
this time, the one sentence that I really loved is they recognize that 6.5% is below potential. I
Hmm.
was so happy to see that sentence because I'm getting worried, Diksha ji, that we are reconciling to our fate that we will grow at only 6%, 6.5%, maybe after, and we start justifying this with lot of. We have very good creative people to justify any number. Then after 3 years, percent. You can always say, right, external Trump and this and that and all kinds of
Yeah.
stuff. And then we go to find our percent, then you have even more creative people justifying it.
Hmm.
That was my biggest worry, if you ask me, for the last couple of years, that are we drifting that path? At least RBI seems to recognize that 6.5% is below potential. If you ask me, more than the rate cut, I really loved that sentence. But
Hmm.
coming to the rate cut, yes, they have cut the repo rate, which is the rate at which they lend reserves to banks, which used to be 6.5% some 3-4 months ago. Now it is 6%,
Hmm.
which means the cost of funds to lend for banks will go down. Not only that, they are calling their stance accommodative. What that means is, and they have explained it in the press statement itself, that now unless they change the stance, only thing that you can expect from RBI is a rate cut or no change. There's not going to
Hmm.
be sudden rate increase now. So
Yeah.
either it's going to be no change or a rate cut. That's what accommodative stance means. Earlier, the stance was neutral. Neutral, as you can imagine, can be anything. They may increase
Hmm.
rate, reduce rate, and before that, it used to be withdrawal of accommodation, which means they were bias was on the increasing rate. From there, we have come to neutral to accommodative. It means this in simple language means RBI realizes that growth is the number one concern, not inflation, and they have to be ready to support growth in whichever form they can, and that's why they are coming out with this accommodative, and it's welcome. I think both the change in language, both this recognition that you can't keep worrying all the time about financial stability and tighten stuff and kill the economy. I
Yeah.
think this is very, very welcome.
Also, now that this is the second rate cut, so now can the borrowers expect reduction in their, say, EMIs or the interest rates on various, like, home loan, personal loan, etc. And what does it mean for the businesses now?
Yeah, so some of them will happen mechanically.
Hmm.
For small businesses, for instance, we have a system called EBLR where their benchmark rate is linked to repo rate. So when banks lend to a small firm, their
Hmm.
benchmark rate itself is linked to repo rate. So if a repo rate is cut, the automatically it will get passed through now. So some of them will mechanically get lower rates, but eventually whether everyone will have a lower rate, it's not very clear. It is not, you I, I have a I usually have I criticize newspaper people, and but now I
Hmm.
forget that I am now speaking to a journalist, so I have to be careful. Right. Right. So I usually tell in my class that you see a headline that your home loan is going to be cheaper and all that. It doesn't work
Yeah.
that way, as simple as it is, because
Hmm.
what is happening, Diksha ji, is that a loan to anyone has this cost of funds plus there is a risk premium. There is this issue of risk
Yeah.
premium also. When
Hmm.
the system itself becomes a little bit more risky, banks increase that risk premium component. If they see
Hmm.
more defaults, what is happening in the last 1 year is there's been a lot of defaults on unsecured loans, small loans. Some categories of loans are seeing like 20% default,
Hmm.
microfinance, and so on and so forth. So if that is a sign of some bigger issue in the economic level, even if RBI cuts its rate, which means cost of funds goes down, if it's quite possible that risk premium can go up and you may not find a significant decline in interest rate. So what we have to
Okay.
observe, we have to wait and see what happens to risk premium of banks. So and as of now, there are some worrying signs. So it may not be that if RBI cuts rates by 1%, our EMIs will fall by proportionately. That may not
Hmm.
happen. To that,
Hmm.
some will happen, but it's not going to be one to one because there is that this risk premium is actually going up.
Yeah, you mentioned last time that there was no mention of risk premium in the, monetary policy review. So was that the
Oh,
case this time also?
it's so nice. You will not believe that in the
Ah,
subsequent discussion, in their
yeah.
minutes of meeting, there
Hmm.
was a mention of this premium for the first time.
Okay.
Right? It was not, of course, we were correct in our discussion
Hmm.
because see that the point there was risk premium moves with the rates. So when rates go down, risk premium should go down normally. But
Hmm.
right now, what is happening is default rates, loan default rates are going up, especially for unsecured loans, fintech, microfinance, and those kind of segments in the last two, three
Right.
quarters. Although
Hmm.
there seems to be some stability now, if that sort of balloons, then banks will not cut rates, substantially, even if
Hmm.
RBI reduces rates, because they have to worry about probability of default. If
Hmm.
they think that probability of default has gone up, then especially when it comes to unsecured loans, those who borrow personal loans type may not see a significant decline in interest rate, even if RBI cuts rate. So that is a bigger issue that RBI can only do so much. RBI,
Hmm.
if there is an issue with the economy itself, RBI will not be able to help much in that case. So we have to see
Right.
that part.
So, how many more rate cuts do you anticipate? And what would be ideal level of the rate right now? Would it be in the range of 5 and 5.50%, or especially considering the global trade situation that is right now and the unpredictable nature of U.S. President Trump?
Yeah, so those things, see, RBI is not a solution for all, right?
Hmm.
Let me take up with the Trump issue, right? For
Hmm.
Trump issue, the solution is to let the rupee depreciate. Look, see
Okay.
what is he going to do. So what he's going to do is that, see, again, a lot of people get confused on this front. They think
Hmm.
as if rupee depreciating is some kind of failure. It's not a failure. It's China made its all, one of the big reasons, for not the only reason.
Hmm.
Then we'll be insulting Chinese if we say only reason is because of currency. But one
Hmm.
important reason for Chinese success, they kept their currency low so that their goods became cheaper. So one of the things that has happened over the last 10 years, Diksha ji, is rupee is actually, there is thing called real exchange rate. Real
Hmm.
exchange rate is, suppose you buy something in India and something the similar basket somewhere else, and if you convert that into one currency, whichever currency it
Hmm.
is, what is the ratio of prices? Is Indian thing more expensive or the US thing more expensive? That's called real
Right.
exchange rate.
Hmm.
Now, that real exchange rate, if you see over last 10 years, has been appreciating, not depreciating, because we have inflation, right? Our
Yeah.
currency is depreciating to the extent of inflation.
Hmm.
Suppose we have inflation, and if our currency does not depreciate to the extent of inflation, our,
Hmm.
in terms of goods and services, we are becoming more expensive for the US citizen. So in fact, for the tariff, very good solution is depreciation in Indian rupee, and it's happening. It is good.
Hmm.
If
Hmm.
it's right now 86, 87, if it goes to, of course, it should not be sudden one fine morning. It should not become 95. A lot of people get into trouble. But RBI
Yeah.
should follow the path of slowly let it go wherever it is. If its actual level is 90, let it be at 90. Don't call it. Don't go with some people in the in your comment section
Hmm.
saying, oh, you'll not believe. Last time, in people worry that people see rupee going down as some mark of failure. It is not. We
Yeah.
we need, I think we should not.
Like you
It should
said,
be
headlines tell that.
88, 80. And again, only dollar is a very bad way of looking at it. In fact,
Hmm.
RBI publishes something. Those of your viewers who are interested, people who watch your podcast must be serious people who are willing to learn. They should go to RBI. RBI publishes something known as REER, Real
Hmm.
Effective Exchange Rate. So if you ever want to know whether our currency is really appreciating or depreciating, the indicator that you should look at is REER, Real
Okay.
Effective Exchange. It is published by the RBI. That number, if you see that, and that's not just against the dollar, it's a weighted average against most of the countries that we trade. Dollar
Hmm.
has only 9% weightage because dollars, our weightage with the US is only 9%.
Yeah.
That number, if it was 100 in 2015, is now 103 or 104. We have appreciated by 4%. We are not depreciating. Which means, you understand, our goods are 4% more expensive in the
Hmm.
international market than a Bangladeshi or something else, which is not,
Hmm.
which is not. Now with tariff, that may become even more expensive. So one way of to counter that is let it fall. Let the rupee fall to, let's say, I think if it falls, I don't know a particular level. If it falls to a 90, it won't be
Hmm.
a very bad thing. It should not be overnight, but RBI at least should not artificially try to shore up the
Control.
rupee and waste our reserves, forex reserves. That is not advisable with the Trump thing. So the response for Trump tariff, if at all they come after 90 days, now there is a
Hmm.
pause.
Yeah.
That depreciation of the rupee, and not, we should not shy away. A lot of people worry that if you reduce interest rates, rupee will depreciate. Let it depreciate, it's fine. We want that
Okay.
to depreciate. So there is no conflict here.
Hmm.
That's a worry of a lot of people. If you cut interest rates, will the rupee not depreciate? Why let it?
Hmm.
We want it to
Hmm.
depreciate, right? So that way also, it's very welcome. What the RBI is doing. Sorry, you had another question. Where do I want to see the interest rate
Repo
at?
rate is it? Yeah.
Repo rate. I think it can fall easily by another 50 basis point because
Hmm.
inflation is at 3.5.
Hmm.
I think it's expected to be there or even fall, and
Hmm.
2% more than that. 5.5, 5.75, 5.5. I think is a good level.
Also, they have revised the GDP, as you mentioned, right, from 6.7% previously to now they have said for this year 6.5%. So there are two views that's going on. On one hand, we are happy that the Trump's tariff will benefit India in the sense that the kind of tariff it's putting on China, Bangladesh. So in some sense, in manufacturing or say in textiles, it will benefit us. But on the other hand, there's also that Indian exports also might take a hit, or Indian it might uh, impact India also to some extent. So, what's your analysis of this situation?
First, on the growth rate, you said 6.5. See, again, I have a complaint against journalists, right? You should ask, you will not remember. People just get carried away. They don't see
Hmm.
the first, they operated with the number of 7.2%, Dikshaji.
Yeah.
2024-25, they started with 7.2%. and there was no reason to believe 7.2%. And they kept
Yeah.
rate size at 7.2. Then they said 6.7. Then
6.7.
6.5, and the number is 6.5. Everybody knows now what's the big deal. Because now you're saying 6.5 for 24-25 is entire year is over. 24-25 is over. We know it is 6.5 or maybe 6.6, right?
True.
So they should know
Every
their model.
quarter also they have reduced except for Q3.
Yeah, this is a pattern, right? Because they were under the illusion that there was too much demand, we were growing very highly, and
Hmm.
that will cause inflation.
Hmm.
The projection is important because these are fed into the model, Dikshaji.
Yeah.
If you feed in 7.2 into the model, it will
Hmm.
throw out a different. There is this thing called Taylor rule.
Okay.
The RBI may say they are not following academic stuff and all. They are following this only, right? There is
Hmm.
this Taylor rule. If you put in 7.2, it will spit out some interest rate. If they had
Hmm.
put in 6.5 last year only, it would have spit out this interest rate then only.
Right.
They were. So the hope, good that they have corrected. They are coming to 6.5. So this is something we should recognize. Next time when they make a projection, we should ask them,
Hmm.
is it the same model which you used last time? Then we
Hmm.
have to be
Hmm.
careful, right? Are
Yeah.
you changing the model? Now coming to the your question on tariffs, right? I see it's a, forget about whether they will impose on Bangladesh and Vietnam and things like that. That is a short term way of looking things. I think
Hmm.
they imposing tariffs on India, and the way approach that India has taken is very mature. Instead of fighting, India
Hmm.
is trying to sort of give concessions in response, right? I think they've.
Hmm.
I don't have any kind of liquor, so I don't know, but they have reduced tariffs on liquor. I've heard already on some bikes and so on,
Yeah.
which is, I think, overall it will be good for India. It's a blessing for India because India will be forced to cut tariffs because we have been hearing this argument of, now it's called Atmanirbhar. Earlier it used to be called infant industry argument. When I was going to school, you will not believe, we
Hmm.
used to be brainwashed saying our industries are infants and they need to. And this was mid 90s, which is like 45 years after independence, right? Even
Hmm.
then we were hearing that our industries are infant and they need protection. And after 20, this was mid 90 time. Now
Hmm.
25 years later also we hear the same thing. Our industries are infant, they cannot compete. What did so many years of protection do to our industries? Why don't we
True.
have a single product? See, like we can crib about China selling BYD and all that. Where is our
Hmm.
BYD? So,
Yeah.
and while I don't like the tone of the minister recently, the way he criticized startups, he should
Hmm.
actually have criticized established industries. If at all somebody, because we the problem is, we are all the startups are politically not very influential. You can criticize them. I think the
Hmm.
biggest conflicts are established industries. They are the ones who lobby, use nationalism and all of that, get all kinds of protection, don't innovate, create local monopolies, keep prices high, and never innovate. This is what they've been doing for last 60, 70 years. I don't
Yes.
want to blame a particular group. This is what
Hmm.
established. I think blaming startups is wrong. If at all, a
Hmm.
segment of the industry which has caused great damage to India are these big ones. And this Trump's thing will force these guys to compete,
Yeah.
and they have no excuse for not competing. The minister was blaming startups. What is the excuse for these guys with so much money for not innovating? Why are they not
Yeah.
able to start outside India? How many of
True.
do you know anyone, any developed country buying any of our products? Why should startups are why are we blaming startups? What about these established guys? Why are they not able to sell
Yeah.
products?
And also
Right?
from small things like say pencil and pencil box to a innovative things like say an automobile, car,
Because
bikes.
they are
It's
used to this protection, right? If the
hmm.
government is protecting them, why should they? Diksha has no choice. Diksha has to buy pencil from these three people. Diksha
Hmm.
cannot buy Japanese pencil because then we charge 300% tariff. and
Hmm.
and now, at least at some point, we should take a call that other than defense and all of these sensitive industries where you actually
Yeah.
need Atmanirbhar. I get it. Vaccine, you may need it. I understand. If there is some, we make a list of those where you actually need.
Yeah.
Beyond that, there should be competition.
Yes.
This way of subsidizing and hoping for innovation is not. See, the problem, I'll tell you, it is again, last time also I told you. Now that I see some of these advise and when I get some chance to interact with governments, the problem is someone like me will go to them and will tell them, look, in US also subsidized agriculture. Look, US has
Yeah.
done 20 things. Out of 20 things, 17 things are good, maybe 3 things are bad. It doesn't mean that because of those 3 things they grew.
Yeah.
You know, somebody who is, it's like saying someone who is a rank student was also doing 3 bad things, was
Hmm.
eating a lot,
Hmm.
was doing, suppose you have somebody who's social media and also doing a rank student, so can I say everybody who does social media will be a rank student? The
Hmm.
guy would
Hmm.
have logged 18 hours also, right? It's like saying
And
China.
the biggest problem, I mean, this will open another podcast thing, but the biggest problem that every startup mentioned after Piyush Goyal's statement was the compliance issue and the all these delays by the government end. So this is not the complaint just from the say startup and the businesses in India, but this is also videos floating say from the CEO of these founder of Suzuki and other countries who wants to do business in India. So this is the
Yeah,
major.
that
Yeah.
is a different topic. I think we should chat one
Yeah.
day about that. That is a
Yeah.
different topic altogether. But my bigger point that I have is that the big question is, why are large firms not innovating? Why are we
Yes.
not asking questions to them?
Yeah.
Isn't Apple not innovating?
Hmm.
Isn't Tesla not innovating?
Hmm.
It was a startup once upon a time. Now it is one of the largest firms in the world. Why are
Yes.
our companies not innovating despite having resources? We want those guys, poor guy who's just graduated and 25-year-old, to do Zomato and do semiconductor. What about these guys? And
Yes.
how many, and why do they keep lobbying for protection?
Hmm.
These,
Hmm. Hmm.
and how long they need protection? Can they
Right.
give us a promise that they will be out of infancy in next 20 years? If they were
Yes.
not out of
Yes.
infancy for 70 years, will they be out of
Hmm.
so I think this is the biggest positive for India. I think the forced reduction of tariffs,
Tariffs,
forced, forced
especially
uh,
on EVs and the.
yeah, forced opening to competition will eventually I hope will generate competitiveness within the economy. This
Hmm.
leading to government and using nationalism as a sort of tool. The problem is when you start using nationalism for commercial interest, you genuinely degrade the true nationalism. This is the
Hmm.
sad part.
Hmm.
It should not become excuse for all kinds of to furthering somebody's private interest. That
Yeah.
is, that will be a sad part. And
Hmm.
there is nothing, people should know, there is nothing unpatriotic about using imported stuff. you
Hmm.
know
Hmm.
the language we are talking is imported. Forget all of that.
Yeah.
We should focus on things where we have a competitive advantage, and let the world do stuff which where they have competitive advantage. It benefits all of us. I
Yeah.
understand there are some critical areas, defense and all of that. Make a list. There you have, even if you are not having a competitive advantage, have your own stuff. But imposing blanket tariffs on everything is one reason why we are not innovating.
Hmm.
That's a
Right.
ministry that the minister directly controls.
Yes, very much. So there is also a change in the RBI's inflation. Before it was 4.2, now their inflation target or projection is 4. So how do you see this adjustment?
Oh, I think this was this they again, this is same model gone wrong. Right?
Okay.
They and it had to happen. I'm not saying after the fact.
Hmm.
We have
Hmm.
spoken. They were over projecting. They were over projecting. See, they were living in a world where there was too much demand. All of us were super employed. We had too much money floating around, and we were
Hmm.
all the time going and buying, and that would have created inflation, growth, too much
Yeah.
employment. This was the world they had. Now, finally, they have realized that is not the world we are living in. There is less growth, less demand, and less prices. Right?
Yeah.
This is not
Yeah.
adjusting to. Maybe they stepped out of their building and saw around and spoke to some people and realized that is not true. Right? This is
Yeah.
adjusting reality than anything else. I think it's welcome, but I'm loving the language. I think they're at
Hmm.
least into accommodative stance is a good thing.
So, lastly, Prasanna ji, what will determine that this repo rate trend will continue, and where do you see now India's economic trajectory going?
Oh, nowhere. So this is only going to
Uh,
this is not going to change much. Remember the first time we started talking, we are now stuck at 6.5%. All that will
hmm,
do is bring us to that 6.5%. That first time
hmm.
when you and me were chatting, we were at 5.4,
Yeah.
right?
Hmm.
So we will now do six. Sometime maybe we'll do 7. Sometime we'll do 6.3. So like the RBI projects, I believe their projections. Current projections, I believe that.
Hmm,
We
hmm,
some
hmm.
quarter will do 6.3, some quarter will do 6.7. Some and when we do 7, some of our new enthusiastic supporters of government will go ballistic. Oh, we are, viksit ho gaya,
Achieved 7.
all of that.
Yeah.
And this is what I think that's what RBI has done. The business cycle it ease out. The trend from 6.5 to 7, 8. We need hard. We need reforms. We need ease of the complaints that you're hearing. Those need to be addressed. Budget
Yes.
has done a bit. I should acknowledge that
Hmm.
government. But again, budget. I told you right. I am seriously worried that they will increase tax collection and offset all the positivity they've done. That is
Hmm.
my
Hmm.
the worry. But
No, I
there,
mean, it's good that you're worrying
yeah.
because your worries are getting addressed one by one. So hopefully, this too.
Yeah. So there we need go back to reforms, all kinds of stuff. Maybe we can discuss right
Yeah.
from administrative reforms to doing business easy, education, health. All of these need to go to 10% growth. The biggest item is education. There's nothing else.
Yeah.
You need innovation, research. There's nothing, no other way. You cannot. I know this thing is good. Like they have Siko Kama Yojana type that internship and all, they are not going to solve your fundamental issues. Fundamental our
Hmm.
education has to strengthen, and there is no way we're going to do 10% unless we do we build a solid education system,
Yeah.
make people healthy, and so on. So those things, we have to see. Otherwise, 6.5, 7. The next 5 years we'll do that. Then we'll fall to 5. Then we'll fall to 4, and then
Hmm.
you have people justifying everything. So you'll find some justification.
And lastly, so what RBI can do next? Better our situation.
Yeah. So they're doing, they should focus on, I think, improvement of access to credit. What is
Hmm.
happening here? uh, the whole approach in India, it's not just RBI, right? We go from one
Hmm.
extreme to another extreme. 2 years ago, immediately after COVID, we had a fintech revolution. Everybody
Yeah.
and anybody went on. I'm sure you would have received so many messages. Pre-approved loan, this loan, that loan.
Yeah.
From
So
there,
many
RBI,
fintech startups.
yeah, and it led to defaults, and they have gone to another extreme of completely curbing lending.
Hmm.
And you have, for instance, you have new guidelines on gold loans.
Hmm.
Again, we can talk about it later some other time, which are put in, which are treating NBFCs and banks very differently. Basically, they're tightening lending by non-bank financial corporations. They have to find a middle path of how do they want to regulate these guys. If you
Hmm.
want fintechs, you want shadow banks. These are called shadow banks. You cannot shy away from some of them failing. They will fail.
Hmm.
You cannot regulate them same as banks. You ring fence banks, because why? In banks, Diksha has put in her hard earned money. It's 850 on and she's still doing her job. This money she's putting in these banks, expecting that she's going to get back. There's going to be no default.
Yeah.
There is a way of regulating that. But NBFC, fintech, if you have raised private equity, you raised venture capital funding, these guys have an appetite to take risk. Some
Hmm.
defaults, you don't have to overreact to default. So they have to separate out the way they regulate NBFCs and fintechs. We
Hmm.
have
Hmm.
to take risks. We have to let some of them fail. There is no need to panic if three fintechs fail or five fintech. Let them fail. They will learn
Hmm.
the like edtechs failed. Some edtechs failed, right? Some now the remaining ones are improving their practices. They are becoming better. They're growing again. Physics wala is growing again. Those who
Yeah.
survive will grow, right? We have to have that approach for fintechs also, and we should let them grow. And because I don't believe this argument that people from government makes that we are over financialized. This is the most I don't want to use bad words in your podcast. Let's say wrong argument that that
Hmm.
that I've heard. Because look, Our GDP is 330 lakh crores. Total bank credit is 180 lakh crores. It's
Yeah.
55, 60% of GDP. Most countries have 80%, 100%. How are we more financialized? We don't have access to credit. So
Yes.
RBI should have an approach of improving access to credit, should be willing to, it will lead to some failure. See, there is one thing that we know from finance is that there are trade-offs. You can't have best of the both worlds. If you want
Yes.
absolute stability, then you will have no growth. Like they realize painfully that if they don't cut rates, growth will go to
Yeah.
5%. They will also
Hmm.
realize that if they keep tightening NBFC and lending by fintechs, you will have access to credit problem. These large banks are not going to make 10,000 rupee loans. They're not
Hmm.
interested.
Hmm. Hmm.
Need these microfinance and all of these guys. So they have to have an approach where they should let some of them fail,
Hmm.
and their focus should be on whether the lending systems are robust. What are these fintechs doing? What are their algorithms? And they should not, and sometimes they should not get carried away. They shut down 2 3 NBFCs. Now they reopened again. The RBI is becoming more
Yeah.
liberal, saying their interest rates are too high. Now
Hmm.
this is, look, if you're buying something for 10 days, you
Hmm.
annualize it, it will look crazy.
Yes.
I give you 9 rupees and say that after 10 days give me 10 rupees, right? It's not such a big pain for anyone,
Yeah.
right? But if somebody sits and analyzes that 9 on 10 over 1 year, oh, Diksha is paying 100% interest rate, Prasanna is looting, these guys should be shut down. They should
Uh-huh.
get out of this, let the market grow.
Yeah.
Solution for high rates is competition, not regulation, right?
Right.
And
Right.
some of we know from global financial crisis that banks are different.
Hmm.
Lenders are different. They will mess up. Let them mess up. They are small size. As long as they're small, it won't create systemic issues. Let some of them fail. I think they should have more looser approach towards fintechs and NBFCs. Let them experiment. Let them fail. And rather than worrying all the time about stability and killing this whole market, we
Hmm.
have
Hmm.
a
Hmm.
lack of access to credit is a far bigger problem for us than any concerns about stability. So
Yeah.
that is the next, more than interest
Step.
rate, they should focus on that.
We basically increase their risk-taking appetite,
Yeah.
like how they suggested these startups to take risk in deep tech and innovate. So here also, I think
And I will not
it's
let you
time.
lend. The best part is I will, you take risk, but we
Yeah.
will not let banks lend to you. We will increase
Hmm.
capital adequacy. We will make, but somehow this 22-year-old guy coming from IIT is supposed to take risk. The big guys will not take risk. They want protection. This guy will
Yeah.
not get funding. This guy will not get any of ease. And now we blame him for not doing semiconductor. Now I don't understand it.
Yeah.
Right? Right.
But yeah, let's be optimistic and hope this is heard and gets addressed. Thank you so much, Prasanna ji. It's always a very enlightening talking to you. Thank you for your time.
Thank you. Bye bye.
Thank you, listeners, for tuning in. If you're listening to this episode on Spotify, do follow and rate the show. I'm your host, Diksha, signing off. Jai Hind.